If you work in HR and you're thinking about getting salary sacrifice for your business, we are doing this video to explain literally how it works for HR teams. We're going to focus particularly on things that can go wrong and how you can avoid those things that people generally don't tell you. It's things that we know that you might not know. Just to introduce ourselves, we're from a business called Vehicle Consulting. We set up salary sacrifice schemes within businesses, so we can do that for you. My name's Tom. I'm the head of marketing at Vehicle Consulting. I'm joined by Mike. Mike, would you just like to introduce yourself?
Yeah, no problem at all. I'm the salary sacrifice solutions leader at Vehicle Consulting.
Okay, so you specialise in setting up salary sacrifice at larger businesses, don't you?
Yes, I would say so.
Perfect. So, I mean, you get to deal with HR quite a lot, I guess. So you might even speak to Mike at some point if you're watching this. So I'm going to be interviewing Mike, asking him a load of questions about how it works, the pros and cons, pretty much everything that you can think of to do with salary sacrifice from an HR point of view. So, Mike, can you just, to start off with, explain how does salary sacrifice work?
Yeah, no problem at all. So salary sacrifice is essentially it's an employer benefit which is offered out to the employees, and what it allows them to do is forego a gross element of their salary before income tax and national insurance deductions. And in most cases, like say with any gross deduction, you get a perk. In this case, it tends to be an electric vehicle or a plug-in hybrid vehicle. Now, the benefits of this is it's done at a gross level, so it's before any income tax and national insurance deductions are made. So basically, it's a way for them to get into an electric car or plug-in hybrid car cheaper than what it would be if they went and did it personally.
Okay.
Works very similar to pension contributions, cycle to work schemes, exactly the same principle.
Yeah, but this time it's for you leasing a car.
It's essentially, yes.
And it's all about saving your employees money, isn't it, really?
Yeah, I mean, ultimately the main benefit is it's the employee's probably the next largest outgoing apart from a mortgage. If you can massively reduce that, it looks great as a business.
Yeah, exactly. I mean, the question that everyone wants to know is salary sacrifice worth it? I mean, how much money can you actually, how much money can an employee save with salary sacrifice?
It can be a lot, like I say, there's a lot of variables that go into it. Obviously, insurance gets built into it, so that's a cost which is obviously on the rise at the moment. Obviously, with salary sacrifice, that's a fixed cost built in. But like you say, I know we've done some pricing examples in the past, but it can be well into the thousands in terms of savings.
I've got a few different types of ways of getting a car, which I want you to kind of explain to me which is better. I mean, how does it compare to getting a company car, for example?
So, I mean, a company car and a salary sacrifice vehicle are I class them as two very different cars. A company car is someone starting your employment who needs a vehicle for business purposes alone and needs a business car to do their job. That would then go under the route of a company car. A salary sacrifice vehicle tends to be, it's an employee benefit. So essentially what you're doing is this employee might not have any need to use their vehicle for business purposes, but by your business facilitating it, it works out significantly cheaper for them to get it because they're using their gross salary to source the vehicle as opposed to taking their net salary, going to a dealership and using their net salary to get the car.
Okay, so if people watching this, they've got a scheme set up where they give their staff a car allowance. I mean, if you got that set up, why would you want to get salary sacrifice? How does it compare?
Well, it works perfectly with people that get car allowances, and the reason being is obviously people that take the car allowance, they get taxed on it in accordance. So if you get £500 and you're a 40% taxpayer, before you even see that net salary, you're being taxed on it. Whereas with salary sacrifice, if you're getting paid £500 as a car allowance, you can use that total amount to source the vehicle rather than taking the net amount and then using that as well. So it's basically just making your salary go further.
Okay, so that instance, instead of, say you got that £500 car allowance, as you said, you probably, if you're a 40% taxpayer, you'd probably be left with like 300 quid?
Give or take, yeah.
Whereas if you do it on salary sacrifice, you can spend the full 500.
Yeah, because it's done at a gross level, so it's done before that deduction's ever been made and the income tax and national insurance has been made on that £500, so you're using the total amount of your salary.
And the businesses who have a car allowance scheme, or whatever you call it, if they have that set up already, do many of them switch over to salary sacrifice instead?
Absolutely. I mean, like you say, it goes hand in hand. If you're getting a car allowance and that's a perk of the business, that's great. A salary sacrifice scheme can just sort of be bolted onto your employer benefits to further add to that. So you're getting a car allowance, and look what we do. You can also use your car allowance to get an electric EV, a plug-in hybrid, and you're using it at a gross level rather than a net level.
Okay. The other thing I want to compare it to is leasing a car personally. Some people just do not believe that salary sacrifice is cheaper than leasing a car personally. So, is it cheaper?
It's significantly cheaper, yeah.
Why though?
Well, first of all, as we keep mentioning, you're doing it at a gross level. So it's before income tax, national insurance. Basically, what you're using is your total gross salary before any income tax, as opposed to taking your salary, getting taxed on it, and using the net amount to then go source a vehicle. That's the key reason why it is cheaper. But like I say, there's loads of added benefits onto it. Obviously, if you're doing it for a company, companies tend to get better terms because it's basically using corporate terms, and you're getting bulk orders, so you're stacking that on top of it as well.
So it's a bit cheaper that way.
Exactly. And like you say, then you've got insurance to worry about as well. Like you say, salary sacrifice, or a bolt-on of our salary sacrifice scheme is built-in insurance. It's a fixed cost. Insurance costs are going up, so the total amount that you see when you go onto our portal or when you get a quote from us, it's all built into one package.
And you pay for the insurance with your pre-tax earnings as well, right?
All of this is done at a gross level,
Mhm.
so there's no after net and then you're paying anything out afterwards. It's all done at a gross level, so all of this deductions that you're making save on income tax, national insurance, and that's where it starts working out significantly cheaper.
Okay, but what about if someone was looking at salary sacrifice and went, I'm just going to get it from a car dealership, which is going to be cheaper?
But it's going to be definitely cheaper doing it through salary sacrifice.
Same reasons again?
Yeah, as like you say, it's exactly the same reasons. I mean, another thing to sort of work on is obviously leasing is becoming sort of more predominant in the personal market now. Historically, it wasn't. However, PCPs or personal contract plans probably are still the most popular way of getting a vehicle, which essentially means you pay a fixed amount, sort of a lease, but you don't own the vehicle for 3 years. But at the end, you've got a balloon payment to end.
Mhm.
Sorry, a balloon payment to pay to own the vehicle. Now,
Yeah.
I don't know what the statistics are, but I'm sure when we looked into it, it's about 80-90% I think it was more than that actually. I think
Yeah.
never actually paid a balloon at the end. So you're basically taking an agreement which has got a purchase facility which attracts APR, other stuff like that.
Paid with your post-tax earnings?
Paid for your post-tax earnings, and you never actually own the vehicle at the end anyway. So you've basically done exactly what salary sacrifice was, but you've just decided to do it personally.
So I mean, if you want to pay it monthly, which majority of people do these days for their car,
Yeah.
this is probably the best way of doing it. If you want a new or a nearly new car.
Absolutely, yeah. Like you say, I mean, people with car allowances, companies tend to have restrictions on vehicles anyway. Tends to be if you receive a car allowance, you're using your vehicle for some form of business purposes. Most companies don't like people driving around in 25-year-old cars because it's not compliant or it's not safe for the business. So, and this, like you say, it's just an added facility onto that as well.
Now, the one thing that people never believe us on is that I say that salary sacrifice is often cheaper than getting, say, a 3-year-old equivalent car on PCP. Is that true?
Well, it's significantly cheaper for your salary sacrifice, and I know that sounds ridiculous. It's a 3-year-old car; it should be less. Like you say, I know we've done an example here, which I'm sure we can send a link out for anyone that's got a question on it. As mentioned before, most of these cars are done on what's called a personal contract purchase.
Mm-hmm.
So there's a balloon at the end, and there's an ultimate ownership at the end of the vehicle. And by the time you've stacked the discounts together, the pre-tax incomes through salary sacrifice, it just works out significantly cheaper. So you're getting exactly the same deal because most people never purchase these vehicles.
Mm-hmm.
It's brand new, it's insured, and it just makes a lot of sense.
Yeah, exactly. I mean, we've done quite a few videos showing examples of literally brand new cars. Then we find a 3-year-old, like the same model but 3 years old. The brand new one on salary sacrifice is cheaper.
Yeah, absolutely. I mean, like you say, but when obviously if you opt into Salsac and you look at some of them, you can nip onto it yourself. I mean, we took them just from generic websites or common websites in the market for this, so you can do the research yourself and look into it. It's not just us that are showing it; you can physically go and look at this yourself.
And how are staff using it? Are people using it to save money, or do people generally use it to get a fancier car?
It depends. It tends to split into two sort of demographics with it, because obviously it's cheaper than you're doing it personally. Some people use it as a cost-saving exercise and think, well, I'm spending this much, I can get the same car and it's costing me X amount less, or I can get the electric equivalent, I should say, or plug-in hybrid equivalent, and it's costing me X amount less, so I'm saving money, I'm getting a new car, it's a no-brainer. However, other people look at it and go, well, I want to spend exactly what I'm spending now. I'm driving this, but now I can get a premium brand version of it, or I can get a better car for my money. So I'm actually just making, whichever way you look at it, it's basically making your salary go further. And from a HR point of view, you're making an employee's salary go further. Whichever way they decide to go down it, it benefits them.
Okay, you mentioned plug-in hybrid cars quite a few times. Is it electrics? Is it plug-in hybrids? Is it petrol? Which car does it work for?
Yeah, exactly. The reason I elaborate on that is obviously a lot of people that do this in the industry just do pure electric.
Mm-hmm.
And the reason they do pure electric is there's no way around it. It does benefit pure electric best.
So it's cheapest?
It is cheapest, yeah. All these cars, because they're done under the business, they do attract a benefit in kind.
Mm-hmm.
Now, for electric vehicles, that's a 2% benefit in kind, which is really, really cheap. So what you're saving all this money on income tax and national insurance, and you're paying a very little proportion of it back
Mm-hmm.
in benefit in kind tax, and that's where salary sacrifice makes so much sense.
Mm-hmm.
So you see a lot of schemes just predominantly electric. However, this does still work for certain vehicles that are plug-in hybrid.
Mm-hmm.
And the reason I say certain vehicles is it's not just a fixed 2% benefit in kind for plug-in hybrids. It goes from 5% all the way up to I think now about 20%.
Okay.
And that's a calculation on how far it can go on pure electric, what its CO2 emissions are. There's a lot of different variables to it.
Yeah.
So plug-in hybrid, although it's not as cheap as the electric route, we appreciate some people might live in flats, might not have access to charge it. They might just not be ready to make that jump yet.
Mhm.
But you can still use salary sacrifice to save a lot of money.
So I mean, so if you're paying, for example, if a car's got 8% benefit in kind rate, is it still going to be worth it to do it through salary sacrifice?
It still would definitely be worth it, yes.
Okay. Now, can you get hybrid cars on other salary sacrifice schemes, or is it kind of just through our company?
No, so I mean, there is a few others which do it. There's very few and far between now. Like I say, when I say hybrid, it's just something to bear in mind. It's plug-in hybrid electric vehicles. You see a lot of vehicles now with sort of the hybrid tag.
Yeah.
It needs to be a plug-in hybrid, which basically means it can fully shut off the combustion engine
Mhm.
side of it and function solely on electric. They're the only ones that are really going to benefit in this scheme.
Would you say if you were HR watching this and you want to make it the best benefit for your team, offering a scheme that has plug-in hybrids available as well as just electric is going to be more, people are going to be more into it?
Yeah, I mean, if as an overall take-up, you're going to get significantly more take-up if you open it out, just because some people are reluctant for electric vehicles just because of where they live. Different.
Yeah,
there's
it's
various,
not for everyone.
it's not for everyone, and there's various different reasons. Although I would strongly recommend full electric, because I think people, until you drive one, you don't quite understand how little you actually need to drive and how much more beneficial a full electric can be.
Yep.
We understand people don't want it. Now, it's worth noting different companies have different reasons for introducing SALSAC, as I'm sure we'll touch on. Some of them want it from an environmental benefit, in which case pure electric might be better for you.
Mhm.
But if you're wanting a benefit which opens up to as much as your company as possible, offering a dual RAN one might work better as well.
Okay. Right, so I'm going to get into, I've got a million quick fire questions which I'm going to go through at the end for you, which we get asked all the time. I just want to talk about how companies usually get started with it. I mean, who usually gets in contact with you first?
This is a great question. I mean, it probably ends up coming from director CEOs. Ultimately, they tend to see our promotional stuff, and like you say, we do a lot of promotional stuff on sort of higher end vehicles because the saving looks drastically more on these vehicles. So we tend to get CEOs, directors, which initially touch base with us,
Yeah.
and then they just sort of get in contact with us on LinkedIn, go for our website. There's loads of different routes to get in contact with us. We have a conversation, and then it kind of filters through then to HR, finance directors, environmental, payroll. It filters through to all them, and they're sort of the key stakeholders that we usually deal with when implementing a salary sacrifice scheme.
Is it usually HR who kind of, is the leading force in dealing with everything salary sacrifice?
Yes, because it's probably different. I mean, obviously we are vehicle consulting, we're a leasing broker. We've dealt with company cars, large commercial fleets for such a long time. It tends to be fleet managers that we deal with.
Mhm.
Now it's an employee benefit, it's a perk. So it tends to not be a fleet manager that deals with it because it's not necessarily used for a business purpose. It's an employee benefit which then sort of filters over to HR,
Mhm.
and that's why we find that they're sort of the key people involved in this.
And that is why we're doing this video today.
It is why we're
Okay,
doing this video.
right, it all makes sense to me now. Okay, let's talk about what's actually in it for HR, because I think a lot of HR teams look at this and go, I mean, it's going to land on my lap, it's going to be a load of problems, we've already got, we've got car allowance set up. What's in it for me as an HR team? So, I mean, why would an HR team want to set it up?
Yeah, I mean, rightly so, it's the right question to ask. I mean, I do sympathise with some HR because some schemes, they do just sort of set you up on a portal, leave it to you, and then it becomes difficult because then it does sort of become a burden on you.
Mhm.
We don't function that way, which I'm sure we'll touch upon later as to why we're sort of different from the other providers. But from HR, like you say, essentially you're improving your employee benefits. There's numerous reasons. It could be from a carbon footprint, which might be more of an environmental standpoint. Recruitment is a massive one. It's probably one of the most commonly requested employee benefits to get people in there. And retain business. So like you say, using this, you can use it, and obviously you can explain the benefits of why you're doing it and you're helping people get vehicles, but ultimately you're actually attracting and retaining the best talent. Employee opinion surveys, EVPs, it adds to all of them. If you do ESG reporting, if you're of that size, you can filter this into it, you can offset your carbon footprint. There's a multitude of reasons why you would implement a salary sacrifice scheme in a company.
The big one, though, is it saves your staff money, it can allow them to get a nicer car, your staff are going to be happier. Would you say that's pretty much the big one?
Yeah, like you say, I always refer to it, you're making your employees salary go further. And ultimately, that's the main thing. Like you say, in a world where people are looking for different jobs here, there, and everywhere, a benefit scheme, I think, is really what keeps employees at a business. And if you can make someone's wage go further, you might not be in a position where you can increase everyone's wage year on year. But if you're making their whole over benefits better, you're giving something back to them, which could, like I say, it adds to retaining staff.
Yeah. Okay. So staff retention is a good one because I got more money, like you just said. Attracting staff. Would you put this in job adverts?
Yeah. I mean, why wouldn't you? I mean, like you say, when almost job adverts show employee benefits, why would you join our company? I'm sure you'll see it on a lot of job adverts. If you're sort of looking out there, you see it. We offer a salary sacrifice scheme because it's a desirable benefit. Like you say, if you can reduce someone's car cost by 20, 40, 45% if they're in that lucky region, that's a lot of money.
Yeah, exactly. Now, one thing that some people worry about there's the whole staff retention thing. You're keeping staff at the business. We've just said it's partly because staff are saving money. But I think some employees might look at this and think, am I going to get locked in to this business? I mean, am I able to actually leave? Is it like that?
No, not at all. I mean, like you say, once again, it probably depends with certain suppliers. I mean, we can only talk about our current providing. And like I say, although you want to use this as not necessarily, say, golden handcuffs, you want to entice them to stay at your business. At the same time, you don't want your employees to feel like, I'm stuck here, I can't get out of it. And there's an answer for that, and the answer is early termination protection. And essentially what it is, it's a bolt onto the salary sacrifice scheme, where if an employee leaves the business, goes on long-term sick, maternity and paternity, basically they can hand the vehicle back without any cost to them or the employer as well, because that's probably the big one. And what a lot of employers ask is, this is a great scheme, what happens if all these people sign up though and then all these people leave for whatever reason? Are we stuck with the cost? And ultimately the contract is between you and the finance company. It's not an employee contract.
The business.
Yes.
Right.
So you want this protection in place to protect you as well. So you find that employees are quite happy to take this. And this is all these costs are borne by the employee, by the way. It's probably worth stating at this point. To set up a salary sacrifice scheme with ourselves, it costs absolutely nothing to the business. In theory, actually, the business actually could potentially save money in this regard. Obviously, it's a gross deduction on someone's salary. So when you have a gross deduction, obviously, you're saving on NI on someone's salary. Now, some companies decide to pass that saving back to the employees, make it even cheaper scheme, drive more take-up. Great. Some people sort of put that in a pot and sort of retain it. So whichever way you go about it, the worst case scenario is this scheme, even if you pass all the NI savings back to the employee, the worst case scenario, this scheme costs nothing to implement as a business. Best case scenario, you're saving NI money to redistribute in other elements of your company.
Okay, you kind of touched upon it already. You've beaten me to the punch, Mike.
It's almost like we've done this before.
Yeah, exactly. I want to talk about how salary sacrifice can go wrong, because this is something you don't really see anywhere else. Because there are things that can go wrong, which on the surface you might not think about. And now you've mentioned this, the big one that everyone worries about is what happens when an employee leaves. We get comments on our videos saying that they've had salary sacrifice set up in their business. An employee has left the business, but they've got a salary sacrifice car, and they've got to continue paying for the car. That's exactly what you want to avoid, because that's just going to be a nightmare for you in HR, isn't it?
Yeah, I mean, ultimately that's what we try to avoid, and that's why we sort of emphasise that you take early termination protection, especially if you're a large company and offering it out to a large employee population. Obviously, we're not just a company which offer it to large businesses, we also do small businesses. Goes without saying, if you're a small business and you can see a potential to save money on your vehicle and you're a director of the company and you're the owner, you might not need early termination protection for obvious reasons. But if you're offering this out as a wider employee benefit, then yes, absolutely, you want to mitigate as much risk as possible to your company. And like you say, avoid it by taking early termination protection. But I suppose just stemming on that, it's not just early termination protection that you need to worry about. I mean, that's the big one, that is the elephant in the room. But there is significantly other sort of risks which you need to be aware of. One of them we touched on before, which is sort of admin burden, and that is can quickly become a burden, or quickly become a problem. Now, the way to mitigate this is, like you say, it's all about the provider you set up with. There's no sort of there's always going to be an admin element with salary sacrifice. Ultimately, it's a business contract hire agreement. The salary sacrifice is just how it's implemented through payroll. Now, what you can do to mitigate that is the provider that you set up with. Like you say, from ourselves, I'll talk about us, we position ourselves firmly between sort of HR or your company and your employees. So when they get requests or when they set up on the scheme, and ultimately they'll find the path of least resistance, and it tends to fall on an HR's feet.
Yeah, well, so if an employee, something goes wrong, I mean, they don't understand what to do next, generally speaking, they're going to try and get in touch with HR.
Exactly, yeah. So what we do is we position ourselves, when we launch the scheme, we put all the FAQs on there, who to contact, direct details to ourselves, and we sort of sit as the intermediate there and answer these questions, which we do day to day. We're probably more of a knowledgeable than HR, who just literally, most of them just want to set up the scheme, implement it on payroll, and that's all they need to do. And ultimately, that's all they should be doing. Us as a provider, we answer the questions, and it could be questions that we get asked loads of different questions. It could be, how does this look on my payslip? How does it go for income tax? But like you say, some people, this is their first journey into electric vehicle. It could be, how do I charge my car? It could be questions like this, and HR don't want to be answering questions about how do I charge my car, where does the cable go,
exactly.
Things like this. So we position ourselves there and answer these questions for you to mitigate the burden for them.
Yeah, I mean, the last thing HR want, look, cars isn't what HR do.
No.
So you want, I mean, if I was in HR, I was setting up salary sacrifice, I would want to just get a provider who can just say, you deal with it, please. I'll do payroll, but I don't want to do anything else.
Yeah, like you say, you'll find a lot of larger companies actually have a dedicated fleet manager for their company car fleets or vans. Now this is done completely separate. So you've got your fleet manager who look after your company cars, vans, but then you've got HR who are like, well, we've never dealt with it before because we've got someone who's employed to do it for the business.
Yep.
But this is an employee benefit. So although, yes, it is cars, we just provide you with the information which you're used to, pension deductions, cycle to work scheme deductions. We provide you with the simple information just to input into your payroll system, or speak directly with your payroll system if you outsource it as well.
Okay. Next thing that can go wrong with salary sacrifice, I mean, this isn't that major a deal, but not all salary sacrifice providers are the same price for literally the exact same cars, are they?
No, there's quite drastic differences, and there's quite drastic differences in sometimes the way it's presented to you as a customer.
We'll get to that one. I just want to focus on price for now. Basically, the big names charge big prices, to the point where, I mean, again, we get a lot of comments on our videos, people saying, I mean, the price of my salary sacrifice is as expensive as leasing the car personally, which makes it completely pointless.
Yeah, it sounds strange, doesn't it?
So would you say that if you're going to implement a salary sacrifice scheme, you want one that's going to be a good price?
Yes.
How would you achieve that then?
So, I mean, like I say, without saying any of the big names in them, a lot of the salary sacrifice providers actually write their own finance. When I say write their own finance, they're the ones that purchase the car and lease them out. So there's only one calculation there, because ultimately what you do is when you purchase a car, you work out how much it's going to depreciate. So there's only one calculation ever being done there.
As in one finance provider?
Yeah, exactly. One finance provider, they are the finance providers. So they sort of have their own calculations. Now, I'm not saying they've massively made the price stupid. Their calculations might just be different to what other people's are. Us ourselves, we are a broker, and people class broker as a dirty word, don't they? But ultimately, like I say, when you do your car insurance, you go on places like Compare the Market, Go Compare. You go out and you get the best price, and that's exactly what we do. So like I say, so when you come to us and say you're looking for a Tesla Model 3, we'll go out to a panel of our funders who are all sort of fighting for our business, and we go with whoever's offering the best price for you. So you can guarantee that when you go with us, we've took it out to a panel of funders, we've gone and got the best price, which is why, like I say, whenever we do price examples, we tend to be significantly cheaper in the market, because we're using our buying power along with different finance companies to get you the best price.
So is it the way it works is that all these different finance providers, they buy the car and offer different rates? So it can be like literally one exact same car from different finance providers. They all offer different prices.
Yeah, all offer different rates. They've all got an idea of what it's going to depreciate over 3 years. Some of them might be buying it with more discount than others.
Yeah.
Some of them we might be using, they might depreciate less, but we've got our own built-in terms, and we can use them together to get you the best price. But ultimately, that's what they're for. You wouldn't see that in the background, but we go out to a panel of funders, get you the best pricing, and then come back with just one price, which is, this is the price for the vehicle.
The other thing that salary sacrifice providers with just one financier might do is, and they do this, is they get your company on board. They say, oh, look at our prices, they're nice and low. And then get you to sign up as a business. Then once you're signed up, you don't have there's no competition. They can just put the prices up and do what they want with the prices. So they put it up during the middle of the contract, and then towards the end of the contract, they go, oh, we want these guys to re-sign, let's make them a bit lower again. That's what they do, isn't it? And you've got no control over that.
Yeah, I mean, prices go up and down over the course of the thing for various reasons. Obviously, interest charges go up, everything like that. But in answer to your question, like you say, although everyone's prices fluctuate, at least you know you're going out to a panel of funders whose prices all might be fluctuating, but you're getting the best price. Ultimately, all you want to see as an employer or HR is that you're going out and you've done the right job and you're getting your employees the best pricing for the vehicle, along with the best service, obviously.
Yeah, exactly. Okay. The other thing that, again, we get a million comments about this on literally every single one of our videos. Does salary sacrifice affect your pension?
Yes, so it's something which really needs to do. The quick answer to it is yes, it does affect your pension. Ultimately, you're foregoing a gross element of your salary. Therefore, on paper, P60 at the end of the year, you've earned less on paper because you've given up a gross element of your salary. Now, as a caveat to that, it's worth saying, please check with your employer or HR on here. It's worth having a discussion and finding out what the plan are with the business, because what a lot of our customers tend to do is top up their salary to what they call the nominal amount, which is the amount before any deductions, and they pay their pension off the basis of this. So you're not offering this benefit of salary sacrifice without it attracting a negative. Ultimately, even if it does affect your pension, overall it should work out still cheaper for you as an employee. But it's worth checking out or worth discussing before you launch the scheme of what's going to happen with that. But if it was just an answer, you're reducing someone's gross salary, therefore it will affect their pension unless stated otherwise.
Okay, I mean, this is probably the biggest thing that employees seem to worry about. So from an HR point of view, this is definitely something to get right, isn't it? What would you do if it was your business?
I mean, I don't see the point in offering a benefit without a negative. Like you say, if I would do it off the nominal amount, and if you were that worse, and if you're that sort of cautious about making it cost neutral, use some of the NI savings, what you've got, to offset the cost of there, so it still runs cost neutral for you. Like you say, we have this conversation daily with people about how to run it and how we want to run a scheme. We can structure it so it runs cost neutral. It will always run cost neutral. It will never cost your business a penny to set up a SALSAC scheme. But in my answer, I would probably do it off the nominal amount and not have it affect them, because then you've got this great benefit and there's no negatives attracted to it.
Okay, perfect. Now the next thing that can go wrong is with salary sacrifice is pay slip shock, which is where people order a car, it arrives, they get the first pay slip with the amount taken off, and they weren't expecting it.
Yeah.
Talk me through this.
Yeah, so obviously this is going to show on people's pay slips, and most employees don't tend to look at sort of my gross salary deductions. Most employees get their salary and they look at and use the number in the bottom right of your pay slip which says net salary. That's what I'm physically going to get in my bank every month. Now obviously this is done at a gross level. We like to educate them, and new employees need to be educated before they opt into this. This is probably where we're a bit different. Before we launch scheme, we don't just like to launch companies up in sort of 2 or 3 days. Although in theory we probably could with our systems, we like to sort of go through a process and educate your employees and provide FAQs, closed off webinars, very similar to this but closed off to the company, and answer any questions which they may have. So then when they opt into their scheme, they look at the payslip and they understand it, and like you say, there's no questions on the back of that. Yeah,
exactly. And it's to avoid these situations like this payslip shock, because I think what a lot of people expect is they don't realise that it's going to be taken off their payslip, and that's how it works. But they think there's going to be some kind of direct debit coming to their bank account, don't they?
Yeah, if you do, I mean, it's just the way it's explained to them, because ultimately, like you say, most people tend to have a personal agreement, say they're paying £500 a month for this, or say they're paying £400 a month for £100 for the insurance, a total of £500. But when they see it in our place, like you say, there's still going to be an deduction with this. With salary sacrifice, you're still paying for a benefit. So say you get a vehicle and the gross deduction is £300, or so the net amount is £300 a month. Your net salary is still going to be £300 a month less, but obviously you're not then going out and spending £500 to get a vehicle. You've already got the vehicle and you've already paid for it when you get your pay slip. So it's just sort of how it's explained to them, so they know going forward how it's going to look.
Okay, so in that same kind of region on educating your staff what to expect, which is super important if you you work in HR, because you don't want panicking staff. One thing that a lot of staff don't realise is that your tax code can change, or does change. A member of staff might get a car, they see the tax code change, and they just immediately lose it, basically. How do we avoid this? Again,
Well,
is it just education?
Like I say, it's education. I mean, it goes without saying, obviously, in the eyes of HMRC, this is still a company car. It's still a taxable benefit.
Mhm.
Therefore, it's going to have a taxable benefit to it, which is going to affect your tax code. There is circumstances where it might not affect your tax code, but that would be what we call payroll and a benefit, which I'm sure HR are very well aware of, where we build in the benefit in kind tax into the gross deduction over a course of a period, so you're not having to do things called P11D reporting, which you would do for company cars.
Mhm.
But yeah, ultimately it does affect your tax code. What we would do, like you're saying, what we do is we explain this beforehand, and this is the reason why we don't just like to launch a scheme. People jump into it, they see a gross deduction, a net deduction, and think this is going to save me loads of money, and then, like you say, they get the pay slip shock. We explain all this to them, and they understand how it's going to work and how it's structured, so there's not questions like this when they get the pay slip.
Just on understanding why the tax code changes, you've got to pay that benefit in kind tax as you paid. So is the way that's collected is by basically reducing your tax-free allowance?
Yeah, exactly. I mean, I think at the minute, I think it's 12,570. Don't quote me on that. But I think that's not a normal tax code. Essentially, what it would do is, depending on whatever the benefit in kind tax is, it would reduce that tax code to the amount to recollect that benefit in kind. So basically, you just start paying tax earlier when you get paid than what you would do if you didn't have a benefit.
Yeah, I think a lot of staff start panicking when they say they have the 1275L tax code, it might change to 1175L.
Yeah.
A lot of staff think, I've lost £1,000.
Yeah.
But you haven't. They've lost 20% of £1,000.
Exactly.
Okay.
And like I said, that's just how it's explained to them. Like I said, people, it's hard because, like you say, most people have never had to deal with this and not took a benefit which attracts this. We just make sure we educate them correctly so they understand it before they go forward.
Okay. The other one is, again, it's linked. It's very closely linked to this. Tax code changes, but there being a great big tax code. We get a lot of people commenting again on our videos saying my tax code got absolutely hammered when I got a salary sacrifice car. Why would that be?
It's a great question. I mean, that's probably circumstantial as to find out why. Obviously, anything full electric is a 2% benefit in kind, and essentially your tax code would be 2% of the actual vehicle value. In regards to why your tax code has drastically changed, I would have to look at it as a case by case.
Well, in this, I can tell you.
Okay.
In this particular example of someone commenting on our video, they got a Toyota RAV4, which they saw as a hybrid, but it's one of these hybrids. It's not a plug-in hybrid,
Right.
And
So it's not from our system.
No, no, it isn't. Now they've gone out and got a
Yeah.
hybrid car and thought, great, this would be fantastic. But the thing is,
Yeah.
the benefit in kind was something like 37% of the value of the car.
Yeah, and this is what I was sort of alluding to earlier, is salary sacrifice. Although in theory you can salary sacrifice or anything if you could want to put it through there, but with ourselves, I mean, we only do full electric and plug-in hybrids, and that's only because we're only going to offer a perk which we actually think there's a benefit in. Obviously, like I say, plug-in hybrids go sort of the highest level is 18-20%,
Yep.
but petrol, diesel, normal combustion engines can go as high as 37%. By the time you've sort of done a salary sacrifice, you're saving all this money on income tax and national insurance, you're just paying it all back in benefit in kind tax.
Mhm.
And obviously if you're a 40% taxpayer, 45% that starts getting, I mean, even as a 20 it's a lot of money now, but it starts to become ridiculous as what you're paying back.
Okay, so if you are opening up to allow your staff to have plug-in hybrids, it's important to educate them on that benefit in kind is slightly higher for plug-in hybrids, just so they don't get that shock at their tax code
Yeah.
changing a bit more.
Absolutely. I mean, from our point of view, and if you weren't partnered with us, we would educate them on that anyway. I mean, we would let them know what benefit in kind is, and if they were looking at a plug-in hybrid or they had a specific need for a plug-in hybrid, we'd probably make suggestions on ones which were closer to the 5 to 8% tax bracket rather than the ones that end up in the higher end, just because it's ultimately you want this perk to save you money, and
Mhm.
you want to find the most viable way to do that,
Yeah.
and that's how we would do it. I mean, it is something that needs to be educated, and unfortunately there's a lot of vehicle manufacturers now that say it's a 1.6 hybrid,
They just slap the
sort of
hybrid
do it on,
badge
yeah,
on the back, don't
which anything that's got an electrical element which helps the drive of the vehicle
Yeah.
can be classed as a hybrid.
they?
But what you really need, if it's not full electric, is what's called a plug-in hybrid,
Yeah.
which basically means the engine can solely turn off and it can solely run on electric.
Perfect. Okay, now, this is another thing that can go wrong with salary sacrifice. Again, it's something that no one apart from us, it seems, is talking about. So it's something called accelerated payments. Explain to me what this is.
Yeah, I'll try my best to explain what it is. I'm not too sure. Well, I think we've got our reasons to why it is. Essentially, accelerated payments. So when you opt with ourselves, say you go for our portal and it's a gross deduction of £500 a month.
Mhm.
Now that gross deduction of £500 a month won't change. Say you're taking a 3-year contract, it'll be exactly the same gross deduction all the way through.
So it'll be that £500 every single month.
Every single month. So it's really easy to manage through payroll. Obviously things might change behind the scenes, i.e. benefit in kind tax might go up, but in terms of actually the physical gross deduction, that will always stay the same. So for
Mhm.
payroll, HR, it's really easy. You log in, obviously we do all the work for you, we do all the calculations, everything. Ultimately though, we can't deduct your employee's salary.
Mhm.
So we give you all the information, so you just literally log in, gross deduction £500, and you could set it as a reoccurring deduction for 36 months, and that's it. Then you
Mhm.
can leave it from your side of it, and it's as easy as that. Now
Mhm.
accelerated payments, what other suppliers are doing is basically the sort of front loading the payments. So for example, if it was the same £500 a month, month 1 to 8 might be £800 a month gross deduction, and then months 9 till 20 might be £550 a month, and then at the end it might be like £450 a month.
Yeah.
Which, and then what the more annoying part of this is if it was just advertised like that, I could go with it. But what they then do is show an average cost,
Okay.
which makes it confusing because that's what you think it is
Yeah.
every month when that's not the case.
Okay.
And with things like this, like you say, the main problem that you're going to have as HR and payroll is that you're going to have to, one, it makes it difficult because you can't sort of track it, and your employees aren't going to know how much is coming out. They're not going to be able to work out most of them, the net cost to them each month. It just gets difficult. But more than anything is you as HR are going to have to log in after 6 months, update the gross deduction. You're going to have to let the employee know that it's changing so they're aware of it. Then you're going to have to do that again in another 6 months.
Is it not the case that it's different every single month?
There is some cases where I've never looked into it too much, but there is some cases.
there are some who literally every single month the payment is different. So from payroll or whoever's HR, you might manage payroll, you're going to have to change it. The person's pay every single month for 36 months for every single employee who gets a car through the scheme, aren't you?
Yeah, and this is sort of where we allude to where the then admin burden starts stacking. I mean, with ourselves, I'd say if you had 10 cars, 15 cars of ourselves, I'd say it's no more than 10, 15 minutes a month of implementing deductions. I mean, even saying that's just 1 month. If no one orders a vehicle in a month or no one gets a salary sacrifice vehicle, it's nothing, it stays the same. Whereas in these cases, you're going to be logging in every month and it's going to be hard to track and it's just difficult.
Well, yeah, so that's obviously one big problem. Another potential massive problem that you're going to have as HR, if you have these accelerated payments, is if an employee gets a car through the scheme, they say, great, the average payment's £500. That employee might just think in their head, it's going to be £500 every month.
Mm-hmm.
They haven't read through this accelerated payments, what it's going to be actually going to be every month. They get their car, the first pay slip is, like you said, it might be £800, and they aren't expecting that. And that is going to cause havoc for you in HR, isn't it?
I mean, there's a number of reasons for it. I mean, obviously, ways of looking at this, obviously, with salary sacrifice and any other employee benefit, I should say this isn't just salary sacrifice, you can't deduct someone's salary below minimum wage. So say if you've got someone who sees the benefit in this, because it doesn't matter whether you're a 20% taxpayer, 40% taxpayer, it's still cheaper than going doing it personally. But as it's a benefit, we can't, and you can't as an employer, take someone below minimum wage on their deductions. So if someone's got a vehicle which is on the sort of the cusp of it, and they see £500 a month, that fits my budget, but then they opt into this vehicle, and suddenly the first gross deduction is this massive amount which takes them below minimum wage, you as an employer are going to have to top up their wage to cover that cost, and then it starts becoming a cost to the business. So there's other reasons why you wouldn't do accelerated payments, not just for the admin burden, just from I'll be honest with you, I'm not sure why you would do it, but it's a lot safer, it's a lot easier, and it's a lot more precise, and your employees will be a lot more thankful that it's just a fixed cost, because ultimately everyone wants to everyone likes to budget and know what they've got per month, and this is a real easy way to say this is what I'm having each
exactly.
month.
The whole point is that you're paying monthly because it's easy.
Yeah.
If you're going to make it different every month, it is no longer easy.
Exactly.
Okay, right. Well, that's pretty much everything that I can think of that is bad about salary sacrifice. Now, we've just painted it in a terrible light. But let's talk about, if you were setting it up in your business, if you're the HR person, how you would want it to be set up to make it nice and smooth running. Okay.
So, I mean, it's
Well, I mean, let's start. What would you do to stop the problem where an employee leaves, the employee getting a big bill or the business getting a big bill? How would you set that up?
So the first one I would do is straight away early termination protection. Now, we've got numerous different, we're probably a bit atypical to different companies, we've got different early termination protections to suit different employers.
Yep.
But I would certainly have a conversation with them, work out what suits you best to minimise your risk, and especially if you're a large company, look to take out early termination protection. And when I say look to take out, look to add it onto the scheme, because this is a cost that's borne by the employee, but look to make sure it's added on for anyone that wants to opt in.
Okay, so you said that vehicle consultant's got multiple different types of early termination protection. Is that the case with all salary sacrifice providers?
No, some of them are just a fixed one-off early termination. This is our policy. Ours is a bit more tailorable and flexible.
Okay, so the reason you do that, I guess, is because a 10,000 employee business is going to be different to a one.
Exactly speaking,
business.
yeah. We aim to cater for all company sizes.
Yep.
Everyone's going to have different requirements for that.
Okay, how would you stop there being so much admin? If you're looking at all different salary sacrifice providers, how would you make sure you don't get loads of admin?
Ultimately, you want a provider which is going to have a sort of a customer-focused, tailored service, where they manage it for you.
Yeah.
So like you say, what we've talked about with ourselves, we position yourself in between sort of your employees, HR. We answer all the questions, we do all the payroll reporting. Ultimately, from you as HR, all you're going to want to see is, one, when an employee orders a vehicle, it gets sent across to someone who approves it, just to make sure that you're happy for him to have that car. Once that's approved, that's as far as it goes with yourself. We do all the other stuff. I mean, we can always go to driver's license checks, things like that. We can even check the partners if they're going to be on the insurance policy. We do all this, and then what we do is we just filter back to you a payroll report every month. But you also have access to it yourself, so you can also log into your dedicated portal and pull it off yourself if you want to manually do it as well. But ultimately, that's all you need from HR.
Okay, how would you get the best price?
So getting the best price, I'd look to go to a provider who's multi-funded. I'd try and avoid ones which is just sort of a sole supplier, or they are the finance company, or only use one finance company. Because ultimately you're only getting one price. Whereas with a broker or with someone who's multi-funded, you're getting various different prices, and ultimately that's going to save your employees money.
So if you are looking at different salary sacrifice providers, ask them how many finance suppliers do you have.
Yeah.
Okay. What about the pension scenario? How would you set that up?
So the pension scenario, I mean, that's completely company policy. I mean, every company has got a different pension contribution. I mean, some companies might have a massive pension contribution where it might affect an employee more than someone that's just sort of a statutory normal pension. I would want to top up to the normal amount, but like you say, what I would say is that's probably one where have a conversation with us, ask them what our opinion is. We'd need to understand your current pension circumstances, but then we would advise what we think is best. Yep,
fair enough. What about the, how quickly would you launch the scheme?
Depends on the size of the company. For small businesses, there's no reason why we can't just have a one-off consultation, go through it with them, and we can implement it pretty quickly. As long as the employee understands what's happening, and like I say, the smaller the company, the easier that is. For larger companies, we like to say sort of between 4 to 6 weeks, give or take that area, more so than anything, just because we want to sort of go through it ourselves, understand the company, understand why you're looking to launch the scheme. We build dedicated FAQs for yourself, we do close-off webinars. We want to make sure your employee population is educated as much as possible before we launch a scheme. Really, because we see significantly more take-up. Like you say, there's no...
And less headaches, I guess.
Like you say, there's no cost to set up the scheme. We don't charge to set up the scheme, so it's mutually beneficial for you want as much take-up for your reasons as we want people to order vehicles, essentially.
Okay, so the whole purpose of maybe taking a bit more time, set it up right. It's just going to save you a load of hassle as you launch the scheme and further on down the line.
Save HR and the employers headaches, save the employees the problem of it, and it's easier for us to implement. Okay,
and the accelerated payment scenario. Would you ask a salary sacrifice provider if they do accelerated payments?
I would ask them if they do it to not do it. But no, in answer to your question, accelerated payments, I'd avoid it. If I'm being honest, I'd keep everything fixed and concise.
Would you say that that's potentially quite a big problem for HR?
I think it becomes a massive admin burden for HR, especially for larger companies, yes.
Okay, no worries. Let's move on. I want to talk about how it works for payroll. What happens every month? So, say an employee or a number of employees get a car through salary sacrifice. HR or maybe payroll, if it's a separate department, are going to have to deal with this. Is it simple?
Once again, it depends on the provider. If you're doing it manually yourself, obviously you're going to have to work out the calculations, work out the VAT reclaim on it. It can be admin taxing for yourself. If you've got a provider which builds it for you, Very little is the honest answer. I mean, we do all that for you. We do the payroll reporting. Ultimately, we just filter a payroll report back out to you. But as I mentioned before, anyone that opts into the scheme, HR would probably have an admin access, so they can just go into it and pull out the payroll report as well. And it says the gross deduction there, and all you need to do is implement that gross deduction for the period of the contract, because it doesn't change as mentioned. So if it's a 3-year contract, just set a recurring payment for 36 months.
Okay, so with some salary sacrifice providers, it's going to be different for everyone, but some will make it more simple than others. Is that fair to say?
Yeah, absolutely. Some of them just set up the contract, provide you with the sort of, like I say, because ultimately it's no different to what a normal business contract hire is. They'll provide the business contract hire, they give you employees fee, but then sort of leave you to calculate how it's done, which isn't great, if I'm being honest. You want one that's going to do that calculations for you, because it just makes it much easier.
Okay, so it's just the figures in black and white given to HR or payroll.
Absolutely.
Okay, that's nice and easy. And the payments, like you said, they're going to be with vehicle consulting. The payments are going to be consistent every single month.
Yeah, the payments are consistent every single month. The rates don't change.
Okay, I'm going to move on to some quick fire FAQs. Are you ready for those?
I am. Let's go.
Okay, we'll try and keep the answers short and snappy if that's all right. Can you get plug-in hybrids?
Yes.
Do you own the car?
No.
Who owns it?
The finance company owns the vehicle.
And who leases the car?
The vehicle. Well, the employer leases the vehicle. The contract's between the employer and the finance company.
Okay. How is the money taken out of the? How does the employee pay for it?
So it's done as a gross deduction at payroll.
Is there a direct debit for the employee?
For the employee,
yeah.
You wouldn't see it as a direct debit. It's a set amount per month as a gross. So if you do a pension contribution, you see your gross salary deduction. I wouldn't refer it to as a direct debit, but it is sort of a monthly deduction.
Yeah. Gotcha. Can a company come to vehicle consulting if they've already got a salary sacrifice scheme set up?
Yes, you can. Obviously, we'd want to understand, more than anything, we can do it for you. We'd want to understand your current circumstances, because the last thing we would want is if you've already offering early termination protection, everyone's policy is different. We'd want to make sure, basically, we're looking after your employees, so one of them doesn't take a vehicle and think they're not insured for something that they're not. But in answer to your question, yes, you could.
Okay. Do the prices of the cars get hiked as soon as an employee gets one?
No, not at all.
Okay. What happens if the employee leaves?
If the employee leaves and you've took early termination protection, you would ring us up, let us know the employee's leave, that we would then sort of facilitate the return of the vehicle, get the early termination costs to it, and get it covered for you into early termination protection insurance. There is other options. Obviously, that employee might have took a vehicle on a really cheap rate. Another employee might want to reintegrate that into the company. We can also reintegrate cars into the company if they want to do that as well.
Okay. Why are the prices in your video so cheap compared to other salary sacrifice providers? Bit of a plug, that one.
Bit of a plug. But as mentioned, we go to a panel of funders. Like you say, we've got different early termination protections which suit the employee better. Ultimately, we go out, we find the best price, we find the best early termination protection that's most cost effective, find the best insurance, and we bundle it all together, and that's why we're cheaper.
Okay. Will my tax code get ruined if I get a car?
It won't get ruined. Your tax code would be affected. I wouldn't say ruined.
Okay. Is insurance included?
Insurance can be included, is the answer.
Okay.
Most of the time, yes, it is. It's a bolt-on. Some larger employees, if they've got a large fleet policy already, some employers kindly put that on their fleet policy. Bit uncommon, but you can do it. Alternatively, it would have to be a bolt-on with our insurance policy.
Is a charger included?
So a charger isn't basically included in our price. However, we can do it.
Are companies who list a free charger, is it really free, or is everyone
is anything free? Usually it's an assumed cost, I would say.
So it's built in.
They have to say it's free for tax purposes. Obviously, if there's a lease, if this is a lease agreement, there's no ownership.
Yep.
If you sort of build in a cost to that and you return the vehicle, who owns the charger? That's why they have to bill it as free. But to bill it as free, you have to assume a cost. So, say you've got 10 installs, 8 of them could be £800 to install, 2 of them could be £1,500 to install. They'll take an average. So therefore, most people are paying a premium for 2 people, that are a small minority that aren't.
Okay, right. So if you aren't having the charger, you're still paying for it, essentially.
Yeah, you're still paying for it.
Okay. Does this work if you earn over 100 grand?
Yes, arguably it works better.
A lot of people think that it doesn't work. The more you earn, the less it works.
No, so obviously when you're in a 40% taxpayer, 45% taxpayer, if you're lucky enough, I think it's 150 grand now. Obviously you're giving up the gross element that falls in that period. That's where the benefit is. If you fall between 100 to 125,000 pound, once you get over that period, if you're lucky enough, every £2 you earn over 100 grand, you lose a pound on your tax code.
Mhm.
So if you're deducting it in that sort of realm, every £2 you're giving up, you're actually getting a pound back of your tax code. So you actually fall into this real benefit of it being really cheap for yourself.
So put simply, the more you earn, the more beneficial it is.
Yeah, usually speaking. I mean, it benefits everyone, but it does benefit high percent taxpayers better.
Does it work for 20% taxpayers?
It works for every percentage taxpayer. Ultimately, you're doing it at gross level. Whether you're saving 20%, 40%, 45%, you're still saving percentages.
Okay. Can my partner drive the car?
Yes, your partner can drive the vehicle.
Can I get a car for my partner? More than one for myself and my partner?
Yes, you can. Subject to your wage allowing you. Like you say, if you earn enough to salary sacrifice 2 vehicles and it doesn't take you below minimum wage, there's no reason why you can't have 2.
Is there a minimum amount you have to earn?
There's not necessarily a minimum amount you have to earn. We just can't take you below minimum wage. So it tends to fall to give a good option of vehicles. Obviously, minimum wage is just going up. I would say 30 to 32,000 is probably the realm of where it starts being offered and starts being a viable option.
Okay. Is salary sacrifice just for company bosses?
It's not just for company bosses, no, it's for entire employee populations.
Okay. Is it a company car?
It's not. It is classed in the HMRC as a company car, yes.
Okay.
But it wouldn't be classed as a company. That's an employee benefit.
Okay. Will my tax code change?
Your tax code will change unless you pay all your benefits, but most of the time, yes.
Okay. Does it affect your credit score?
It doesn't affect your credit score. The lease is between the business and the finance company. There's no individual searches on you as a person.
Can you get a petrol car on a salary sacrifice?
You could get a plug-in hybrid, which is a petrol/electric.
Mhm.
So yes, you could do that. Full combustion petrol, no, because the benefit in kind percentage would just be too high to warrant the benefit of it.
Okay. Is it just new cars?
It is just new cars, yes.
And do you have to pay another type of tax if you get a car on a salary sacrifice?
But you pay benefit in kind tax, which obviously we've alluded to on the video.
Perfect. They're my quick fire questions. That was a quick fire round. Okay, if I wanted to get started with salary sacrifice through vehicle consulting, it sounds great. How do I go about doing it?
Yeah, so first of all, get in touch with myself or, like I say, Daniel here who works in the industry. Usually we have a little QR code at the top, but it's
Yeah,
not
I've got
there.
rid of that.
Yeah, it's not there this week. You can consult to myself on LinkedIn.
Mike Cottrell.
Yeah, sort of explain your company situation. I'll get you on a quick sort of, it's usually a 15-20 minute Teams chat,
Mhm.
go through your company, why you're looking to implement it, and then what I can advise next steps there, whether it benefits you, whether I don't think it's the right scheme for you, and we can go forward from there.
Mike, I'll put the link to that in the description. Call with him. I'll also put a website so you can fill in a form on there if you prefer doing it that way. Anyway, I think that's about everything for today, Mike. So thank you very much. I hope that was helpful for you. As I said, if you do want to get in touch, click the link in the description or comment interested, and we will get in touch with you. I hope you have a fantastic afternoon, and we will speak to you soon.